Hey, good evening, everyone. This is Ajit Mishra, and we're going to start shortly. All right, let's get started now. So, welcome all in the weekly webinar of Week Ahead with Religare Technicals. So, in this webinar, we talk about what was the overview and how the market performed during the week and what we are anticipating for the next week, especially in the key indices, both Nifty and the banking index, followed by the list of sectors and stocks that one should keep a close eye on. And lastly, we'll end up with the quick poll, whether you like it or whether you wish to have different kind of webinars so that you can share through this poll. And lastly, that Q&A button which is there on your screen, you can use the same to ask your questions related to the presentation. So we largely recommend that the question should be around sectors, not the individual stocks, so that it benefits majority of the participants. So let's get started with a quick disclaimer now that the information shared during the webinar is only for educational purpose. It's not meant for trading or investment. So in case if you wish to make any position based on the information shared, please check with your financial advisor. Now coming to the key indices performance, third successive week of gains for both Nifty and Sensex. So last week, in fact, we have discussed about it that 17,600 we have reached. A breakout above that would result in a trend reversal in the Nifty index. So yes, we have breached that mark. We have decisively closed above the same as well. So Nifty closed around 17,828 and Sensex around 60,400 plus zone. So both the indices ended on a strong footing, and sectors banking has been a constant wherein we are seeing consistent buying interest, especially in the private banking majors. Then we have stocks from auto, metal, and energy basket. Reality, yes, it did exceptionally well, but the weightage is comparatively lesser. So all these sectors did exceptionally well. At the same time, when it comes to the losers, IT and media. So media anyways is not performing, that we all know, and IT was slightly on the back foot also off late after the TCS number. So in the evening we have Infosys results, so we'll see the reaction on Monday morning. So IT is slightly on the back foot as of now, and the weekly closing basis also it lost nearly 1.5%. Talking about stock specific performance in the Nifty 50 basket, you'll see that especially from the auto basket, we have three names: Eicher, Tata Motors, and Bajaj Auto. Out of these top five gainers, we have three names from the auto basket. Then we have Divis. After a long underperformance, a sharp recovery in the passing week, roughly around 10% kind of a gains. Then Adani Enterprises also managed to gain nearly 6.5%. On the negative side, in line with the sectoral performance, two names from the IT basket, Infosys and HCL Tech, roughly around 2 to 3% kind of a cut, followed by Tata Consumer, NTPC, and HUL. So it was a mixed basket when it comes to the loser, but yes, IT was among the top losers. Now, what we are anticipating in the next week. So if you remember that we were somewhere here last week, it was a holiday shortened week, so we had very less session during the week. But Nifty not only crossed this trend line resistance, this upper band of the declining channel, but gradually maintained this bias. So if you see that last 9 session, the Nifty is ending on a positive side, means we are having a positive close, though at times it was almost flat, like today's session, it was almost on a flat note, but the close is positive. So 9 trading successive session of positive closing. This is something which is definitely indicates that bulls are trying hard for the trend reversal. But yes, at the same time, we are not seeing very decisive candle. So if we exclude this session a day before, like 3-4 last trading session, it was more of like consolidation followed by closing around the day's high. But still, since we are seeing the best part is that across sectors we are seeing buying interest. So it was started with the banking, financials, cascaded to FMCG, then auto. Then this week we've started seeing a bit of a recovery in middle space also. So barring a couple of sectors like media, IT, and selectively energy also, because Reliance is still not participating in the move. The rest of the sectors are performing well. So indications are in the favor that post this breakout above this declining channel, we should gradually inch toward this upper band of this previous distribution range. Because from that area, Nifty drifted gradually lower and made a low close to around 15,800 zone as well. So but after 9 days of successive rise, there's a possibility that Nifty might witness some consolidation, but it is okay as long as we are holding 17,600 to 17,400 mark. So this is the lower band that we are anticipating, 17,600 to 17,400 on the downside. Upside 17,950 to 18,150 area is what we are eyeing, in the Nifty pack. So tone positive with some consolidation expected due to this recent, surge for the 9 trading sessions successively. 17,600, 17,400 base area, support area, 17,950 to 18,100 is what we are eyeing as a target. Next comes banking, which is definitely, leading from the front. Today also, when the Nifty was almost flat, the banking index was up around 1.5%. So private banking majors specifically are doing exceptionally well. So SDFC, and then we have ICICI. Now we are seeing a catch-up move in excess also. So private banking majors are doing exceptionally well, and post this trend line breakout above this 41,400 zone, we have seen like almost a vertical rise. So now we are eyeing 42,500 to 43,100 zone, which was the previous distribution area again, to act as a resistance in the next week. But first, since we have SDFC results scheduled over the weekend, we'll see the reaction in the early trade. Apart from Infosys, HDFC Bank is also is going to announce the numbers. So we'll see this both Infosys and SDFC dictating the trend in the early trade on Monday. So as of now, indications are favorable that yes, this outperformance which we are seeing in the private banking space specifically will continue. Because like I said that excess have not participated yet. Now we are seeing a catch-up move in Kotak also after a prolonged period of underperformance. So all these stocks, apart from the top performing names like SDFC, ICICI, will help the index to maintain this positive trend. So in case if we see any dip, 41,200 to 41,700, 40,200. Will be the major support base for the banking index. Now comes stocks which one should keep on radar, both on positive and negative side. So if you remember that a couple of weeks ago we were discussing about the pharma pack not performing well, but still we have few names which were showing indication of positivity. So Dr. Reddy was one of those stocks which we were eyeing close to around 4,500 mark, and now it is trading well around 4,900 levels post the breakout from this ascending triangle on the weekly charts. So the positive part is that now we are seeing recovery in the pharma index. And Dr. Reddy's was among the top performing names within the pharma basket. So that adds to the positivity. So what it indicates is that in case if this recovery continues in the pharma space, Dr. Reddy could lead this recovery, and there's a possibility that we might see 5100 plus zone in this stock in days to come. Dr. Reddy is one stock which we like, from the pharma basket, and which one can consider for long trades. Next comes the auto stocks. So auto, in fact, we have witnessed that out of top five names from the Nifty 50 basket, 3 were from the auto space. So now we feel that Maruti should also, see the catch-up move, and this stock which is clearly visible from the base. So if you see that earlier it was close to around 66, 6800, then we had a higher base around 72, 7400 band. Then this time around it was around 82, 8400 band. So it's forming higher band, and then it's gradually inching higher. So we feel that the base formation which is required for any stock to make any sustainable move is done. Auto as a sector is also anyways doing well. Majority of the stocks, in fact, almost all the stocks, earlier it was some of these stocks were not participating, but now even Tata Motors, we have seen a very sharp surge in the last week. So now it's turn for Maruti to witness the catch-up move. So indications are in the favor that one should, consider accumulating Maruti even at current levels with a time horizon of, let's say, 1 to 2 months for the better returns. In fact, for the short-term trading perspective, also one can consider this stock. Now, what if there'll be any profiting in the market? Some of these stocks which may go further southward. First in the list is LIC Housing Finance. So a consistent, underperformer. And within this space also, if you see that the other life insurance housing finance companies, at least we had a phase of recovery, but here the stock is trading well below the major averages, and after this, in a couple of weeks of rebound, again is gradually drifting lower. So we feel that this negativity will continue, and the stock is likely to underperform within the life insurance basket, and in fact in the BSFI basket. So LIC is one of the stock which one can consider for shorting trades in the next week. And lastly on the list, Z Limited, again a consistent name, when it comes to the underperformer. There was hardly any respite of late. It made an attempt to cross 220 hurdle. After multiple attempts, it failed, and again it's gradually drifting lower. So it's an ideal point basically where one can look for going short Z even the current levels. But since we are seeing that the market tone is positive, it's prudent that we should focus more on the buying idea instead of shorting ideas. But at the same time, since we are into the earning season also, so one should not, look for contrarian trades. So in case if Z is weak, don't look for positive trade just because the markets are up. And in case if the stocks are reeling under pressure before the numbers, then clearly indicates. So that is what the indications we have from the IT pack as of now, that mostly IT pack, IT stocks are under pressure. So just to sum it up, when it comes to the key indices, both Nifty and since banking index, the tone looks positive. We expect 18,100 plus zone and 43,000 plus zone in Nifty and Bank Nifty respectively. There could be a bit of consolidation after 9 days of successive rise, but the tone is likely to remain positive. So any dip consolidation can be considered as a buying opportunity. Focus more on buying ideas. On positive side, Dr. Reddy's and Maruti is what we like, which have potential to do well in the next week. And LIC Housing Finance Z are some of these candidates which look big to us. So that is all from the presentation part. Now we'll do this quick poll, and then we'll start with the Q&A session. So please give your feedback, and then we can start with the Q&A session. Please start, posting a question in once you're done with the poll. Okay, let's start with the Q&A session now. So for the Q&A, use that Q&A button which is there in front of your screen. Click on that button and type your question. All right. Okay. All right. So now we'll start with first question from Benjamin on metal sector performance in the coming days. So Benjamin, like as we were discussing that, other sectors are also pitching in. Earlier, it was banking, FMCG, pharma, financials. They were leading from the front. Last week, in fact, in the last two trading sessions, we were seeing a bit of a recovery in the metal space. But if you remember that, since you are a consistent, participant in this webinar, Jindal Steel and JSW Steel, these are the two top performing name within the metal basket, wherein the stocks are trading closer to the record highs. Rest of the stocks, be it Tata Steel, Hindalco, VD is comparatively better from the short-term trading perspective, but majority are still way below their long-term their record highs. So I feel that in a market like this, wherein we are seeing recovery, preferring the top performing names within the sector makes more sense. Yes, they are highly volatile stocks, so one should maintain stop losses when it comes to trading position. But when it comes to metal as a sector, we still feel that top performing names like Jindal Steel, JSW Steel should be preferred. And as and when you get the opportunity to play the momentum, one can look at Tata Steel, Hindalco, and VEDL. Avoid SAIL, National Aluminium, Hind Zinc, Hind Copper, these names, at least the view is short term. All right, next question on IT pack. So as we were discussing about the IT was among the sector which ended lower this week, and indications are not great. It's almost like 1 year that we are seeing this IT sector consolidating in a range. So as of now, I feel that if the view is very short term, then one can definitely avoid IT as a sector until we see a sign of reversal. So maybe next week also this tone may continue. It all depends how the Infosys numbers will pan out. So we may see the reaction, and there's a possibility that we might see some respite. But the tone is not likely to change anytime soon, is what the indications are. So as of now, the preference should be given to the other sectors apart from IT. Okay, next question on the pharma space. So see, pharma again, like selectively we are seeing recovery. So last week it was Divis, which was among the top performing name within the pharma basket, nearly 9% kind of gains. Then we have Dr. Reddy's, which is anyways doing well. Sun Pharma hardly retraced. Apart from that, the underperformers like Oro Pharma, we have seen gradual up move. Zydus is anyways among the top performing name. So it's not that the entire sector is trading in sync, but yes, majority of the stocks are participating in the move. But still, we feel that within the pharma space, Dr. Reddy's, Divis, Sun Pharma, these are the top names wherein we are seeing consistent buying or participation in the recovery. So one should prefer these names. So all in all, it's not a sector-specific market. Even in banking, which is leading from the front, not all the stocks are participating. PSUs are like in fact, either trading sideways or negative. So it's only the private banks which are like, leading from front. So it's more of a like stock specific, approach that one should maintain instead of like, maintaining sector specific approach at current levels. All right. So any questions? Okay, so with this, we end the call here. Thank you everyone for joining in. And next week, same time, not on the same time. Today's Thursday, next Friday, because holiday shortened week. And next Friday, we'll connect. Okay, so we have one question on cement space from Rajiv. So we'll answer this and then we'll end this. So Rajiv, is a sector, again, selectively, yes, we are seeing buying, Ultratech, Shri Cement, and then we have Dalmia, then we have Ramco, which is holding strong. So again, selectively, one can look at Ramco if the view is short term. Then we have Dalmia, which is holding strong. Then Ultratech. So these are the top three stocks which one can look at from the short term trading perspective, and avoid Ambuja and ECC for a time being. We expect this volatility to continue in this sector. All right. So, okay, last energy. So energy, as Rajiv, we were discussing that still Reliance, despite being a diverse player now, holds maximum weightage in energy space. So until we see a decisive close above 2450 in Reliance, we feel that this sector might not see the day of light. But when it comes to the participants, OMCs, they are back down and out. So again, the kind of recovery we were anticipating post the decline in crude, it has all evaporated in last 1.5 weeks. So preference should be given to stock like Power Grid, Petronet, which are low beta counters. They are consistently showing strength. Then we have NTPC, Coal India. Again, we are seeing consistent buying interest. So avoid other names like, in fact, yeah, ONGC is also looking comparatively stronger. So selectively, one can look at these stocks. Okay, another question from Rajesh on sugar space. So sugar as a space, Rajesh, we are not seeing consistent buying. So off late, in fact, if you have noticed that we had a strong swing in Balrampur Chini, which we usually talk about when it comes to the sector, as it witnesses decent volumes and the price action was also consistent. But we are not seeing sustainability in the move. So that is the challenging part. So still we feel that there could be a possibility that we might see another leg of up move, but I doubt that there'll be any meaningful sustained surge in days to come. So avoid sugar for a time being now. All right. So with this, we have answered all the queries. Thank you everyone for joining in. And next Friday at same time, 4 o'clock, we'll connect.